Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Wednesday, April the 9th, 2008. The headlines out of Switzerland this morning said dollar and sterling edged lower ahead of ECB and BOE and this weekend's G7 meetings. The dollar edged lower versus the euro on Tuesday as minutes of the last Federal Reserve meeting showed policymakers felt that a prolonged and severe economic downturn can't be ruled out. It remains steady against the yen and a basket of currencies on the growing views that the economic downturn in the United States could spill over to other countries and prompt their central banks to cut interest rates. Those concerns appear to be backed by data showing a sharp drop in British home prices, raising the chances that the Bank of England will cut interest rates by 50 basis points next Thursday. Analysts said traders bought the euro aggressively in the absence of major economic data from both the United States and the Eurozone, and ahead of the central bank meetings on Thursday. This also helped to put a cap on any dollar drop. Traders are also waiting for Friday's meeting of the Group of 7 finance ministers and central bankers, where a broad range of proposals are aimed at restoring confidence in the battered banking system will likely be discussed. The latest aggressive monetary easing by the Fed to support the economy following a severe downturn in the housing sector tilted the yield appeal in the euro's favor and has been the main driver behind the dollar's sell-off. Since mid-September, the Fed has lowered its benchmark overnight lending rate to 2.25%. The European Central Bank has kept its financing rate at 4%. Yesterday, the euro-dollar was unchanged at 156.96 after hitting 157.99 intraday high. The dollar-yen was up at 102.73, and the dollar Swissy was also up at 101.58. The pound-dollar dropped to 196.70, the biggest drop since March 19. The sterling was the biggest loser of the major currencies on Tuesday. The euro-pound jumped to a record high of 79.90 before scaling back to 79.79. Members of the Fed's Policy Setting Committee worried at their most recent meeting that the housing and financial market stress could trigger a nasty slide in the economy, even as inflation pushed higher. Analysts said the minutes were relatively dovish on interest rates and bearish on the U.S. economy. Halifax, Britain's largest mortgage lender, said UK housing prices fell 2.5% in March, the biggest drop since September 1992, and much steeper than the market's forecast. The dollar was slightly weaker in the Asian session. Global equities stayed negative, and traders pared down high yielders and moved back into the yen. It looks as if the markets are poised for another bout of risk aversion, as European stock futures are set to open below fair value and commodities deleveraged. The Fed minutes of March 18th provided no significant revelations, which had added to uncertainty in the markets. It did come to light that Fisher and Plosser, the two dissenters, opposed the rate cut because, in light of heightened inflation risk, they favored easing policy that was less aggressive. We think this means that they were looking for a smaller rate cut rather than a hold. Overall, the Fed's focus still lies squarely on growth. Risk and future rate decisions will depend on the incoming data and status of the financial markets. Currently, the markets seem to be unsure whether the Feds will cut rates by 25 basis points or 50 basis points at the next FOMC meeting, but we are leaning towards a possible 25 basis points at this juncture. Much will rest on next week's retail sales, since there are significant downside risk conveyed through consumer and business surveys, and of course the first quarter GDP release. Until we get greater clarity for the U.S. data, expect the dollar to be range-bound against the majors, with maybe the exception of the pound. The Bank of Japan voted unanimously to hold rates at 50%, as was universally expected. Members cited the slowing domestic economy and turmoil in the financial markets as reasons for this decision. Shirakawa was appointed the new BOJ governor, as his nomination was approved by both houses of parliament. However, nominee for vice governor, Watanabe, was rejected because of his MOF background. The RBNZ's Governor Bullard made some strongly worded comments regarding the New Zealand economy and the low probability of easing rates. He stated that the Kiwi economy remains strong despite yesterday's NBNZ business survey, signaling a deterioration in business conditions in the first quarter. The final release of the Eurozone's GDP fourth quarter of 2007 is doubtful to reveal any major surprises for growth rate. While the UK industrial productions and manufacturing's output should avoid an outright recession this year, recent surveys, including the CBI, have sent mixed signals. Overall, we are expecting a more downbeat assessment of the UK economy and further pressure on the BOE to move rates on Thursday. That concludes our news for today. We hope you're finding it beneficial to your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find some information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. Also, you'll find a link to our Yahoo forum, which is also Succeed in Forex. We hope you'll be able to join us for our next broadcast. So happy pipping to you until we meet again.